How's it going today? We're going to do the stock market review this week. Been a rough week, but it has its buying opportunities. I made a video on the Trump tariffs and all that and all this, and I think it's overblown. And it seems like the way I look at it, a lot of the companies that are big have a lot of exposure from in China, but if they don't really have any China exposure and all this and all that, I don't really think it's going to get hit. So I made a video on that. I'm just going to go over the some of the stocks that came out with earnings. I think that's more important than what's going on with the tariffs. I'm not saying the tariffs are important, but I think the economy is doing good. I don't think Trump would put the tariffs there if he would think it would destroy the economy, because you have to think he's trying to win an election next year. I don't think he would put the tariffs there and stick them there and say, hey, that's how it is, and if it crashes the economy, oh well. I doubt that way it is, but a lot of people are thinking that way, and I don't really think it's going to hurt the economy too hard. Maybe in some areas, yes, but not a whole lot. The economy's doing well. And we already had some 25 tariffs, but I don't think it's going to hurt it that bad. I think the market just kind of overreacts to all this, and it did the same thing. It always kind of in the summer has always been kind of rough patch. I mean, I remember last summer it was the North Korean thing. I don't know if anybody remembers that, but North Korea and said they were going to have these weapons, and then mass destruction, and then Trump said he's going to leash fire like the world's never seen. I don't know if anybody remembers that, but it happened last year, and it brought the market down actually a little bit because people were scared about it, and people started selling a little bit, and it came down. Not as hard as this, of course, but that really didn't. I always focus on the economy. If the economy looks good, the only thing I really focus on is maybe what the Federal Reserve has to say, the earnings, and really the GDP growth and unemployment. If you have all good there, you're not going into recession or really have any economic problems really at all. But we're gonna get right into the reaction to the all the earnings reports this week. You stick around to the end of the video. I'm actually got two new videos coming out that I'm really excited about next week. They're really big. I could talk to them more about by the end of the video, but we're gonna kick it off with Lyft. And the stock got hit pretty hard, which I feel like a lot of these are like they're impacted by a lot of things that when the market sells the sells off, it's just the way that the market kind of comes out, and there's not a whole lot of buyers. And I mean, I think Lyft got hit a little harder. I mean, there was some, they said they were lost $1 billion, and they see a lot of these things with the media. They go on about it, and it was like the Lyft lost $1 billion last quarter, and it was actually untrue. They didn't lose a billion. It was like 200 million or so. It was still a hefty a hefty loss, but it wasn't as bad because a lot of that was IPO cost and stuff like that the company had to pay. So essentially, it's just one time thing, and that's how it was, and it really didn't affect operation and things like that. One time fees. So it left is I believe it still needs to drop a little bit more before I believe buying it, but Lyft does it looks a little bit better if it would have if it would let's just say if it had a way to become profitable and do very well, I would definitely jump on it. I think it's definitely a thing. So it's definitely on the watch list. I don't recommend buying it yet, but if there's a clear way, and if it was around the $10 billion, if it was on the $25 share, or maybe 30 or so, that would be a very good buy. And well, maybe not a very good buy, but it'd be a buy. Then it would have come down a little bit more, or show a way to be more profitable, because that's the same thing with Uber. I was watching Uber came down a little bit. It was almost it IPO'd and went down 7%. So I hope nobody really jumped on that. But Uber, it definitely has some a lot of these things I don't really it definitely has a long way to become profitability when you're losing 200 million dollars per quarter. I mean, that's quite a bit of money to be losing. But anyway, the next company is EA. Then the stock popped a little bit, but then it sold off. I mean, that's just the market with it is, and you really can't judge a quarter on what the stock price does after. I mean, it could be a great quarter, then it sells off, like some of these companies I'm going to get to that we're looking at, and it was a good, solid quarter for EA. For what the expectations weren't really set high. It get a little more on it was some weak guidance, and it's just it was what we were expecting. Nothing really special there. I still think EA is still a good company and still gonna do farther down the road, and I still recommend it. And the next company is Upwork. Upwork was basically the same story. It sold off heavily. I mean, this was one stock that just got hammered for some reason. I don't know why. It was 20%. It got hit 20%, and it's like you're sitting back and go, Jesus, you know what I mean? That's a heck of a hit for what it did, and it beat expectations. It's still losing money, but not as much. It's coming more profitable and it's gaining. I think that the guidance was slightly lower, but really it met the expectations, and then it kind of sold off a little bit. So I believe Upwork, if you haven't got into it, be a good stock to get into. I think it was like 20, now it's all the way down to 16 or even 15. At what I'm recording this around noon today, so essentially, I mean, it might go it will fluctuate a little bit. The next company is Match Group. Match Group had a great quarter. Had a subscriber growth on Tinder and all that, and I really believe that could keep pushing this stock up. Like I said, I could leave a link down in the descriptions about why I recommend this stock, why I like this stock, and it had a great quarter, and it went up over 12%, but then it sold off because the market the market's kind of like a theme for all these. The market is all news is bad news, and that's just how it is, and it just sells off. And it gave you actually a good buying opportunity. I actually bought a little bit more of it. When it came down, it was up over 12%. Then it sold off. And then after I think the whole week, it's still flat. So essentially, you had, a pretty good buy-in. And so essentially, and that company has a long way to go. It's only, I think, a $15 billion company. So if it keep going, they're a 30, 40, $50 billion company. I can see that. So essentially, I mean, that company has a long runway ahead of it. The next is the Trade Desk. The Trade Desk, it had a great quarter. I actually made a video on it. It had a great quarter, but man, that stock got hit pretty hard. I think it already went down 30% from its all-time high. I don't know why that did that. And it beat on top line, it beat on earnings, and then it even raised guidance, but it didn't raise it enough. And then the stock got hammered. I mean, and it was kind of stuck into this big sell off with the market, and it just didn't really kind of cover, and it just got kind of thrown under the bus. I mean, that's what happens sometimes in the stock market. I believe if you haven't bought the Trade Desk, I think it's in the 180s. I believe this is a good time to get in on the Trade Desk. I think it's a great company. It does great things, and I made a video fully explaining it. I can leave it down in the description also. But I mean that company, I believe that's definitely. I believe that company, the way it does it, I believe that company could be easily. It could maybe not easily, but in a couple, maybe 5 or 6 years, that company can easily be. Now it's about an $8 billion company. And that company could easily be a $50-60 billion company. So essentially, you'd be getting in at $8 billion. It'd be going 8 to 60. I mean, that's a heck of a gain. I mean, that stock price would be over $1,000 a share if it didn't split. But anyway, and it's only 180 now. So essentially, it has a pretty good runway in front of it. Advertisement, especially, it's just like if you make advertisement better and cheaper and something that's going online anyway, I mean, it's in a great market, and it has a big runway in front of it. But anyway, now I'm going to reveal 2 videos. I believe the market is selling off a little bit, and I believe it's has some great buying opportunities. So I'm going to make a video coming out. I will put it out next week about my about what I believe in cloud computing. I believe the stocks. I have about 5 stocks that I believe every single person needs in their portfolio to profit off the cloud service if you choose. These companies I own them all, and I think they're great companies. And that's all the cloud servicing and cloud computing. I could explain it more in the video, but I could get into basically it's the way they kind of store. It's not in databases anymore. It's kind of stored up in the cloud, and it's kind of confusing to explain it. Maybe I could bring up some pictures and stuff with that video and stuff to explain it. And now the next thing I'm going to do next week is a cybersecurity review. I made a cybersecurity pick of all the stocks I like in cybersecurity. 2 ones I think you should own. I could leave a link down on them, but I'm reviewing them stocks. I believe I'm like the only person, maybe on the internet, that kind of, on at least YouTube, that you see that I recommend stocks, and I go make a review. I feel like I'm going to make it every 3 months. Let's say I recommend a stock in like my monthly thing. I'm going to review them. So I go out 3 months, then 6 months, in a year, then so on and so forth. So I keep reviewing them. I think that's good. I feel like that's it kind of, because I recommend them, and that's kind of my, if I recommend them, I'm going to say when they come out, and let's say they do bad or good. This time it did good, but you never know next time. I feel like it's kind of my way I do it, and I could go out here and explain them to them again, review them, and see what my opinions are 3 months down the line. So essentially, I already did it. I think it was way back. It was way back in February, about 3 months ago, where I recommended these stocks, and I still recommend both of them. But I could do a review and talk about them a little bit more, and what happened within them 3 months, and why I still recommend them, and then I could, another 3 months go by, and it'd be 6 months from originally went on recommending them, and I could talk about them again. But anyway, that's the video. That's my overview of the week. And I could bring up them videos. So I guess stay tuned, and I got have them out probably next week. Sometime, I think probably, I don't know when I go, but I could get them out. And thank you for watching, and have a good weekend.